Hey folks, Dan Frio here, the rate update. Today is November 4th, 2021. So we are the day after the Federal Reserve came out and said they're going to start tapering. So what happened? Good news, guys. I called it. Don't go away. We'll be right back. Okay, so nothing but positive today, guys. First of all, let's listen to Rick Santelli giving us the unemployment numbers for the past week. Take it away.
Live at CME HQ with breaking news. Initial jobless claims post another post-COVID low. There's a lot of posts there. 269,000. That follows 281,000, which most likely over time here will get revised as it just did. Moves up to 283,000. And if we look at continuing claims, same scenario. Post-COVID low, 2,105,000. And last look was revised from 2.243 million to 2.239 million. Productivity, a minus sign. You never want to see a minus sign in front of non-farm productivity, down 5%. Down 5%. Just think about it this way. In June, it was 11.2. That was a 50-year high. That was June of 2020. And if we look at unit labor costs, they zoomed 8.3%. And last month, it's 1.3% was downgraded just subtly to 1.1%. Now, in the trade balance, which began in 1992, it now moves from a record minus 72.8 billion, originally released at minus 73 billion, to now minus 80.9, just shy of minus 81 billion, the biggest ever with regard to the trade balance. Interest rates, well, at 157, we're down a bit because we sold off, pushing yields up to that 160 mark. But maybe the most interesting news is we are seeing the short-dated maturities, like a 2-year note, move from much higher levels down to 44 basis points, which is still high, but it does accentuate how the Fed tilted us from paying more attention to raising rates to now back to the taper and how it affects the yield curve. Andrew, back to you.
Rick, thank you for that news and analysis. Going to go straight over to Steve Leisman now to get his take. Steve?
Two real fast points. I think that two-year decline of the two-year yield came as the Bank of England surprised markets by failing to raise rates, which was kind of expected in there. And that two-year is a big thing. It's kind of spilling over a bit into the Fed funds complex a bit. The other thing is we've had a bit of run of good news here. This 269 on jobless claims, good number for jobs. Hopefully that sets us up. We can talk a little later maybe about the jobs report tomorrow. That's one. We have the ISM services. We're surging ahead. So it looks like we're getting a little rebound from the swoon we had in the fall and that lousy Q3 GDP number. Maybe we're getting a little acceleration. Back to you, Andrew.
Okay, so that's positive news for the economy. So now let's dig into the numbers and where are mortgage rates going right now. Remember this thought, put it in the back of your head. I always said we basically trade on the rumors, and then once the facts come out, everything's washed in, and then we start to balance. Remember that? I say that all the time. So let's get into all the numbers that we're going to look at. So right now, jobless claims hit another pandemic era low. Why? People are getting forced back to work, guys. And I've been saying that for months and months and months now. All right, the next thing is the Federal Reserve came in and they're going to taper. Here's the really odd thing. Fed sends the transitory inflation refrain unveils bond buying taper. Okay, so they announced the tapering. But the weird thing is they only really came out on the forefront and said, we're going to taper for 2 months. That's all they really put in there. So here's what they stated. Policymaker, the Fed said, judge that similar reductions in the pace of net asset purchase will likely to be appropriate each month, but are prepared to adjust the pace of the purchases if warranted by changes in the economy. If the economy continues to progress as expected, the Fed could finish tapering those purchases by the middle of next year, Powell said. He stressed that officials have the flexibility to speed up or slow down the tapering based on what's happening. All right, so what's he saying there? Well, this is genius. He basically came out and said, we're going to taper for 2 months and then we're going to reanalyze. So on my side of the equation is they're not really committing full force into everything. They're saying we'll do it for 2 months and then we're going to reevaluate. What happened years ago when the Fed came in and said, okay, the economy's doing well, they started jacking up rates and doing all this other stuff. The markets went in turmoil. I think the S&P was down 15% in like a matter of a week. So they've learned their lesson. Pretty smart here. Okay, so it's not spooking the market. I'm going to show you that in more detail here. So the next thing we look at is MBS's morning. The morning after tapering. So far, so good. So these charts, these are things that I study. I won't put you through that. So let's get on to where the MBSs are right now, and then I'm going to go over where rates are or where they ended yesterday, and we're going to see a nice little rally today. Why? Right here. Okay, so 30. Those that follow me every day, you know that 30 is a pretty big number. We usually have maybe 8, 5, 10, 15. When you get to 30, 40, 50, you got some big moves. Okay, as we look, it's continuing to move. Again, let me explain this. This is what's happening to the MBS, the mortgage-backed security bond price. This is the price. Okay, as the price goes up, the yield or your mortgage rates come down. Look at this. Okay, guys, there was multiple lock requests right here, and I said to my team, we're not locking. This is way oversold. What I mean is too many people were selling, and it was oversold. I expected a rebound, and we did. So if you locked in, say, about 2 weeks ago, please call us, and I'm going to show you how at the end of this video, how you can send me your loan estimate from another lender to let's see if we can get you a better rate, maybe less fees. Okay, so that's the rally that we're seeing right now. What's the economic news that came out today? Well, good numbers. Right here, ADP payroll changes. I'm sorry, we are on Thursday. Initial jobless claims, they're down. Okay, last week was 283. The expectations were 277. The actual were 269. It's going in the right direction, guys. Remember, this is initial jobless claims. So less people filed for unemployment. How's the continued jobless claims going? Well, last month we saw 2.2 million people. The consensus was 2. We're at 2.1. It's still, think of it, it's 100,000 people, 130,000 people less on continued jobless claims, okay, for unemployment. Tomorrow we're going to see unemployment rates and also hourlies worked and hourly earnings and so forth. So that will give us kind of a peg on what's going on with the jobs market. Intraday, look at this. This is really cool. We're doing nothing but rallying. We had a little blip in the radar right here. Green candlesticks mean there's more buyers in the market. So you're going to see the prices go up. When you start seeing the red, that means there's selling pressure. So people were selling, but then people picked it right back up and started buying again. All right, so that's what's going on right there. So where are rates? Well, these are rates that finished yesterday. This is a report that's posted. I try to post every day to show you guys where mortgage rates are throughout the country, and I'll stress throughout the country. You can see they're up 3 basis points from the day before. So 30-year fixed rate right now, let me show you how to read this. The 30-year fixed rate is 3.17. This was yesterday. The previous day was 3.14. Okay, that means it was up 0.03. That we call that 3 basis points. Okay, and then you can see the other rates throughout this area. So let me break down real quick my thoughts on a lot of this stuff. Why the Federal Reserve came out and said that they're only going to be for 2 months. And I've been saying this because I still think come January, February, March, by that time, all of this excess money in the system is going to start pulling its way out. People were spending way too much money, and now they're at the point where they're spending more money than they're earning. And with the stimulus pulled out of the equation for the government sending excess stimulus to families, a lot of them are well needed. So I'm not taking that. But on top of that, what people continue to forget is many people were in a forbearance program for at least a year, maybe a year and a half. The forbearance program didn't require them to make a mortgage payment. Okay. And almost everybody also is on student deferrals. And those student loans aren't needing to be paid until January. So if you take those two expenses out of a family's debt load, you just freed up probably half their income. Okay. And that's what's pushing a lot of people into just spending money, going out to dinner. Everywhere you go, it's packed. Okay, another piece of this equation is inflation. Why do I think inflation's transitory? Again, because of all of this excess money out there. However, some things that have taken place are causing some inflation as well, or a lot of inflation. I was on my way to work today and I see gas prices in Chicago just hovering at $4. Far cry from where we were last year and the year before. Okay, so inflation. So think of gas prices going up that high. Okay, now think of everything that runs off of, and gas is made from oil. So oil prices are way up. So what's all made from oil? Well, gas. Well, gas is in almost everything. How do you get goods and services all over the place? Gas. Okay, so when you start hitting gas prices at $5 a gallon, you're going to see prices increasing, and that is inflationary. Okay, now what happens is, well, we start pumping more gas, where oil prices go down. You're going to start seeing that inflation part of the equation starting to drop. All right, and again, I still feel that the equilibrium on income coming in versus expenses going out are going to start trickling or hitting at the beginning of the year. Okay, again, people are going to have to start making mortgage payments again, their student loan payments again. They're not going to get the excess stimulus. So people, give it a little bit of time for everything to get back to normal in the broad sense of things. So if we have that going in place, and if oil can start driving down, you're going to see a lot of prices on things starting to stabilize or starting to come back. So that's my report for today. I will be out the rest of the day. I got appointments, so I won't be posting a video later this evening. So if you'd like to find out more about me or my team, all I need you to do is go to therateupdate.com. And this is ways that you can get a hold of us. You can give us a call at 844-775-LOAN. You can schedule an appointment by clicking here. It'll take you to our calendar, and it'll tell you the days and times we have available. Just click that and set up your meeting. Or if you want to apply online, just click right here. State-of-the-art system we just came out with 2 weeks ago, and it is doing phenomenal. One thing that we just added recently, if you locked in your rate about 2-3 weeks ago, when I told people not to, right in here, please call me or email me or upload your loan estimate from your lender. Because what happens is when you apply for a mortgage within 3 days as a lender, we have to send you what's called a loan estimate. Okay. We created a new feature so I can review that loan estimate with you to be your personal mortgage consultant. You're going to go to resources, upload loan estimate. It's real simple. Just click there. You're going to click that you're not a robot. And then what you're going to do is just give me a little information so I can email you back with what numbers I can come up with. So you put in your information there. You drag and drop your loan estimate into that portal. Give me about an hour. I'll get right on it and let you know, are you getting the best program, the best rate, and the lowest fees in the market for your situation. So that's it for today, guys. God bless. Thanks so much for watching. Please give me a thumbs up, subscribe down below, hit the bell every time I post a video. You get an alert. I'll see you tomorrow. Bye-bye.